I know you caught the news that silver, copper, and potash have been placed on the critical minerals list for uh, basic by the U.S. government, and that they're vital to infrastructure, to defense, and that clears the way for expedited permits for these projects, as we like to say, north of the border, and that includes Canada as well. And it has a lot of effects. I think it will even qualify it for aid under the IRA Act, which was probably the only good thing that the former administration did for mining while they were there. Hey, could this be like the Manhattan Project for the resource sector?
Yeah, silver is, I'm glad that they did it for silver because silver is probably the single most important individual mineral element that we have right now, mostly for the fact that it's used in everything in small quantities, and it means that the price can move a lot and people will still demand it. And the resource markets, the trading markets have, including former CFTC Commissioner Rostin Benham, have controlled the price of silver, admittedly in public, because it is so critical that the government wasn't doing the markets any favor by not putting it on the critical minerals list and announcing to the public that essentially silver is so important that we need to guard it. The markets were already guarding it. They wouldn't let the price rise too high. There's been a lot of work done quietly by the administration about getting mine supply. And there was an article that came out, I want to say in Zero Hedge, or maybe it was in Twitter, I can't remember, last week, that talked about the U.S. very quietly going to miners to secure supply, but how that may violate certain laws, for like free trade type of laws or business laws in the United States. And they can do it by simply striking a contract. They don't have to nationalize or take over. You simply go to whatever the biggest silver miners are. They're going to be out in Nevada, Utah, California mostly. And you say, hey, we want to buy your output, and you give it to us and you make a deal with the refiner. So the US government wants to get into the silver business because it's so critical.
The Financial Survival Network. Now more than ever. The Financial Survival Network.
And welcome. You are listening to and watching the Financial Survival Network. I'm your host, Kerry Lutz. Robert Kientz is with us from the Freedom Report. Robert, it's great to have you back. I know you caught the news that silver, copper, and potash have been placed on the critical minerals list for basic by the U.S. government, and that they're vital to infrastructure, to defense, and that clears the way for expedited permits for these projects, as we like to say, north of the border, and that includes Canada as well. And it has a lot of effects. I think it will even qualify it for aid under the IRA Act, which was probably the only good thing that the former administration did for mining while they were there. Hey, could this be like the Manhattan Project for the resource sector?
Yeah, silver is, I'm glad that they did it for silver because silver is probably the single most important individual mineral element that we have right now, mostly for the fact that it's used in everything in small quantities, and it means that the price can move a lot and people will still demand it. And the resource markets, the trading markets have, including former CFTC Commissioner Rostin Benham, have controlled the price of silver, admittedly in public, because it is so critical that the government wasn't doing the markets any favor by not putting it on the critical minerals list and announcing to the public that essentially silver is so important that we need to guard it. The markets were already guarding it. They wouldn't let the price rise too high. There's been a lot of work done quietly by the administration about getting mine supply. And there was an article that came out, I want to say in Zero Hedge, or maybe it was in Twitter, I can't remember, last week, that talked about um, the U.S. very quietly going to miners to secure supply, but how that may violate certain laws, for like free trade type of laws or business laws in the United States. And they can do it by simply striking a contract. They don't have to nationalize or take over. You simply go to whatever the biggest silver miners are. They're going to be out in Nevada, Utah, California mostly. And you say, hey, we want to buy your output. And you give it to us and you make a deal with the refiner. So the US government wants to get into the silver business because it's so critical. And what you saw before was the market sort of protecting the mechanics of the silver trade up until the point where it forced the government to do something. And finally, we've got recognition on silver that it's so critical and it's in such shortage. We're going to be running 5 years straight of mining shortages to what's needed for production, which has drawn down global inventories. You saw earlier this year, we had the report on the LBMA that they were almost out of free silver that came out from David Jensen, among some other analysts. By the way, offline, you mentioned Substack. So if anybody goes to Substack and looks up David Jensen, you'll see his reports. And he documented how the London silver inventories were so thin. Ronan Manley, who writes for Bullion Ball, has done the same thing. And so you're seeing these commentators out of the UK say there was a big shortage. And I think that's why silver now is firmly above $30, because $30 was that sort of Rubicon.
Yeah.
Where back during silver squeeze about 4 years ago, you remember that they limited the price of silver at 30, but now it's been above 30 for a while. So the market's taken over and it's like, we don't care what circuit breakers you put on the markets, silver is important. So that move by the market very quietly pushed the hand or forced the hand of the US government to say, okay, we finally got to come out publicly and admit. And the fact that they're doing it on potash, and copper is so critical to infrastructure that over the next 15 years, we do not have the end ground discoveries of copper that we need to electrify the world, including India, China, and what people aren't talking about is Africa. Africa has an amazing amount of investment going into it, and they need copper for industrialization and electrification.
Sure.
So you could take all the mines of the world, including Grasberg, with known proven and probable reserves, and it's not enough. And so the whole world is now moving to protect copper. China and Russia have been doing things in order to secure it, and the United States is just reacting. So, in short, 5 years ago, I gave a presentation at Money, Metals, and Mines and said we're about to enter resource wars, and now we're firmly in them. We went through trade wars and currency wars, and now we're into resource wars. And everybody's scrambling for the resources. And so I think you've also seen Russia nationalize its third largest gold mine. You've seen Mexico say that they're going to limit the amount of new permits to foreign entities. So you're starting to see protectionism around certain key commodities around the world start to take shape.
Interesting. So, the fact that the government's finally acknowledged this, we're going to see a short squeeze in silver. And because Rick Rule, when he was on my show, when I caught him right after his conference, he said that the entities doing sophisticated shorts and hedging in silver are going to be utterly destroyed, to paraphrase him.
Yeah. Yes. And if you look at some of who those were, if you look at Scotiabank a couple of years got out of gold, or at least they said they were getting out of gold. I think they got rid of their service because they were overextended in gold. And when gold started rising, they had so many shorts, it put tremendous pressure on them, and they had major issues. Recently, Bank of America, with their silver short position, has come under a tremendous amount of fire. If we ever got to true 100% price discovery, it could put Bank of America out of business, not just its metal trading desk, but the liability they have because it's a leveraged investment could cause Bank of America to actually have substantial financial trouble. That's how big their silver position is. If you look at, go to Gold Charts R Us and that wonderful service that was done by Nick Laird, and you look at the top 4 largest, and all he does is pulls data off of COMEX. So this is all public data, but he collects it all and puts it into a massive database that's been going for decades. And when you look, so he's got these time charts, which are awesome. And when you look at silver shorts and gold shorts, there's a top 4 bullion banks that are shorting, and we know who they are because they're if you go to the Office of the Comptroller of the Currencies report on derivative positions, it calls them out. It's Citibank, it's Bank of America, JP Morgan, and I'm forgetting HSBC, I think is the fourth, if I recall. Those are the big four shorters in all derivatives and specifically derivatives on COMEX. And that's not just gold and silver, but they do call precious metals out. And it's also been proven. So we know the names of the banks. And if you go to Nick Laird's chart, you have the history of these banks. And part of what happened to Lehman is they were involved in this trade. So banks that have tried to maintain these short positions for a long period over time have periodically, when the market moves up, gone into trouble, because if the price moves too far against you and you're short, you either have to deliver or you have to cash sell these contracts, and you can lose tremendous amounts of money. And for the longest time, the CFTC and the banks worked together, I think particularly in silver, to protect that market, because I think it is a critical mineral. And you can say it's manipulation and fraud, and I think I've proven that. I think my channel, why it got so popular, was we proved Pertament was running a scam. I had a CFA and we were looking at their financial reports.
I remember that.
Their CEO got fired. That was a big thing a couple, 3 years ago. We've seen scams on the COMEX. We've uncovered other scams. And that's kind of what I'm known for as a former auditor. And you could see all of this leading up. You could see the internal mechanics. And now you just can't cover it up anymore. And so instead of them trying to cover it up and not make it an issue and pretend and try to protect their exchange to the COMEX, it's pretty clear two things are happening. One, they can't anymore. And yes, it could blow up one of these major banks. It could blow up their balance sheet. The next black swan banking crisis could originate from the silver short position market. That could happen. It's possible. I don't know if it's probable, but the second thing that's happening is nobody's believing the London and US markets anymore, and the trade's moving over east. So the Chinese hired JP Morgan to help them. They've been helping the last 4 or 5 years upgrade their Shanghai market across all commodities, but in particular the metals. You've had Dubai come out and say, we don't care about the LVMA system. We're going to run our own. And they have access to a lot of African mines. You have India, Russia also sort of coalescing around a new pricing structure and a new derivative trading market, which happens to have a heavier physical component. So to me, it has more credibility, at least in terms of the amount of physical assets. I don't know about the trade because I haven't followed, but you can tell that there's a shifting away from these Western markets, and they're losing control of their pricing scheme. Alistair McLeod, who's been covering these for a long time, has come out and said he thinks that they're losing control. My friend Andy McGuire over at Live from the Vault has been talking about the fact that London may be isolated right now. The whole conversation around tariffs and gold into the US was thought to have been isolating London and breaking up that sort of oligopoly. That Trump didn't do it because all the market observers told him if he did it, it would crash. It would cause major issues if he tariffed gold. And it would highlight the fact that maybe the US doesn't have all the gold it says, and it would highlight the fact that each of the markets has shortages. Because if you look at the collusion between the COMEX and LBMA, they have to work together in this Ponzi system. And when that stops is when one of the two crashes. So the US, it's ancestral. The US can't fully pull away from London without consequences. And so I suspect that the US now is doing the critical mineral and silver. And I strongly suspect that the Sovereign Wealth Fund is a cover for the US to go into the markets and get as much silver and gold as they can. Gold for financial reasons, to help back the dollar treasury system, because Trump knows it's in serious, deep stuff. And silver to protect that industrial component of that metal that we need, especially if we're going into a war cycle. With the regional wars, you definitely need silver. It's in all major military components, including lasers, missiles, guidance systems. And the same thing has kind of happened with rare earths. The U.S. has made rare earth production and U.S.-based rare earth miners a priority, and they're quietly working with rare earth providers to get rare earths, because rare earths are needed not only for the military, but for industry.
Everything.
Because at the same time that you want to bring chip production from Taiwan, because you're worried about China and Taiwan, and China's saying that Taiwan's ours, they basically said it in public, they're going to go after Taiwan. The U.S. now knows it needs to build up its chip manufacturing, but you need silver to do that and rare earths to do that. And so now you're seeing the commodity wars that were held in the shadows before now come out in public with all of these, governmental pronouncements. All the things that we've been talking on the channel for the last 5 years is what's going on behind the scenes is now very public. And now you're seeing that in the news cycle. And it's not a surprise to those of us been following it in detail for quite a while.
Okay. So all this is happening. How do you make money off of this? Obviously, if you're
Yeah.
holding the physical, like you and I are big fans of, but there are asymmetric silver bets out there because at some point, I think, Robert, like when silver breaks $40, it's Katie bar the doors. I hate that expression, but you know what I'm saying. $40 silver is that line in the sand. Hasn't been there since 2011, and from 40, 50, and above. I mean, Eric Sprott saying $300 silver. Uh, Eric knows a little something about resources, doesn't he?
Does. And it's a good segue into something else that Eric invests in, which is mining stock. So if you're looking for leverage and you're just the average man, that's one of the easiest ways to get in because you're not going to have the money to go to COMEX and play the contracts or go to London. That's the big boy game, unless you have a really good sized financial office and a few $100,000 in discretionary income that you wanted to dedicate solely to that trade. I would not advocate anybody getting rid of their portfolio and going heavy into, that. But if you want to get speculative and that's something you decided to do, the mining stocks is a good way to do it. I always say that royalty companies are the easiest way for
Yeah.
newbies that don't want to analyze companies. But beyond that, you can get into the junior miners. You could broadly do it in like the GDXJ or some of the other junior miners. Now you're going to get a little bit of gold exposure and stuff like that, base metal, but that's a way to do it. But the miners is probably the easiest leverage bet. And I would say Impact Silver is kind of a penny stock. It usually trades, around a few bucks,
Mhm.
but it has more silver content than even First Majestic in terms of its total output. So it's almost a proxy for silver, a leverage proxy. So anytime I think silver is going to move up, I could put money into Impact Silver, and it goes up as a function of or a multiple of the silver price. Now it also is going to come down that way. So it's
Mhm.
mining stocks, especially highly focused ones like Impact or First Majestic, move a lot. They're very volatile. But if you want a leverage play, you could do there are like leveraged index funds on the silver price that will take like the SLV price and they'll triple it, something like that. But those are super risky. They're easy
Yeah.
to play for the average person, but they're risky.
Time decay,
Um,
right?
yeah, so I think that there's a risk there. But if you want to take on that risk, any of those options, I would say personally, I would do a silver-based royalty first. It's safer. Then I would do a collection of like junior mining stocks if I were doing it, and then I may look at some other strategies if I wanted the big boom. I think there's going to be enough room that if you've bought silver anytime in the last 3 or 4 years when it was down 10 to 25 or whatever, you're going to do just fine. And to your point, when you look at the charts, silver, I think, is sitting at 13-year highs, something like that.
Yeah.
And we're getting to the point where it's almost reaching that point where it got in 2011, the aftermath of the financial crisis. So, and it's in this massive 50-year cup and handle pattern, which looks like silver just wants to go bonkers. And if you look at supply shortages, you look at it being on the critical minerals list, you look at the lack of mining input, you look at the situations that happened with the Western exchanges being short, and that becoming public. Silver, what people thought was going to happen in 2021 with silver squeeze, probably it's more likely to happen now
Yeah.
in the next couple of years because of all those factors.
And could be happening right now if what we're seeing before our very eyes is any indication.
Mhm.
Robert, just tell us, where do we find you? How do we connect with you on the web?
So you just find me at the Freedom Report. I renamed my channel from Gold Silver Pros because we focus on some things other than just the metals. But I do typically do a weekly metals report at the Freedom Report on Twitter and on YouTube. And I'm also a board member of Citizens for Sound Money. So just plug that real quick. We're the ones that have been behind or been assisting with these legal gold tender bills in various states, including Florida, Texas, and Missouri. The
Love it.
best one is Missouri. We like that one the best, but we've also gone to conservative meetings like ALEC where you suggest legislation, and our bill's been adopted by ALEC as like the official bill for gold legal tender, and so now each state that's interested can go grab that model and
Mhm.
basically come down and just negotiate out the details. So we're doing a lot of stuff behind the scenes to facilitate gold as legal tender again as well.
Just tell us again about ALEC. It's the Association of Locals. I can't remember it exactly. ALEC. What is
Yeah,
that?
it is essentially a conservative, it's almost like a think tank, but what it is 50% of legislators and 50% of industry participants, and they go and they basically talk about and craft legislation. And that legislation becomes part of a national platform that any lawmaker can go look at and say, what laws are popular, what laws are being suggested, and do you have like a template? And so it's like a trial run or a prep for going either state or national level and saying what legislation do we want, what is popular. And the gold legal tender one is the hot bill in the US right now in finance and economics.
All
So
right.
the fact that it's gotten this attention is good because now everybody's looking at like, oh, we don't have to use the dollar if the dollar's having issues. And when states passing this, it allows people to do gold clauses in contracts. It allows people to go pay with gold and silver if they want. Now it's you're not going to do it at the grocery store right now because businesses have to adopt rules and and they have to put it within their existing regulatory schema. So all of that rulemaking has to be worked out, but it will start the process of the state and individual actors being able to transact in gold being completely protected as part of the US Constitution and the state law, which is reaffirming the clause that says states can make no thing other than the gold and silver legal tender. So that clause is still in effect. And with the 10th Amendment allows the states to reaffirm that and say, we're taking that and making it official law because anything not specifically called out, is to the states or people, and it's even called out in the Constitution. So it's really the legislation shouldn't be needed, but it is to offer legal protections for people that want to do it on a state by state basis. So it's what it should have been done a long time ago. And we we're on the gold standard. It wasn't. And so now we're bringing that back. And so that effort is at least getting the states to acknowledge. And then some of the states are starting their own depositories and they're storing it for their own wealth funds because it stabilizes the value of their holdings and allows them to build bridges and roads. And one of the reasons we got it passed in Florida was we talked to their financial office in Governor DeSantis' office, his cabinet level office around finance and technology. And
Mhm.
they said, we can't finance roads and bridges because by the time we get to year 3 and 4 of our project, the dollar has lost so much value. We have to go refinance and take on more debt.
Right.
And so the states are strangling in their own budgets. And so that's why they're passing it because they want to use gold. So that's really, we're at the point in the financial system where inflation has forced the states to now do this. And what's going to happen is we've got 11 states that have legal tender laws. There were 27 states that introduced that last year. 4 or 5 passed. There's probably going to be another 5 or 6 a year going forward. And once it gets to the point of critical mass, it's going to force the federal government and the states into a big legal battle around what is money. And it's going to challenge what the US has planned, which is stablecoins, I believe, is the next money in the
Right.
US.
Yeah,
And
definitely.
it'll interface with the CBDCs of the BRICS. And
Mhm.
this is going to force the feds and the states to talk about what is money. Because if you look at it, they're doing the stablecoins without asking people. And we know that they're going to turn it into money because all these think tanks are telling us they're going to do it. And so, and all the policy papers written are saying that that's what they want to do. Even some of the Fed has come out and supported that. So people at the Fed. So you know that the government's going to try to do it. So we're working at the state level to say, well, there's this thing called the Constitution, and there's this thing called gold and silver. And you haven't rescinded that. And by us forcing the issue, it's going to force it into the public. And it's going to force that eventually probably go to the Supreme Court. So either the federal government is going to have to sue to maintain their monopoly of money, or we're going to have dual currencies floating around the US, which either way, I think
Mhm.
benefits the American people.
All right. Interesting times ahead. If you've got a question for Robert, myself, shoot me an email. What are your thoughts? Are we heading back to the future where the future has a gold standard and a silver standard? Are we heading for a silver short squeeze of biblical proportions? All that. Let me know your thoughts. Put them in the comments below. Robert, always a pleasure. Thanks for stopping by.
Thank you so much for having me on, Kerry.